Guys, I simply could not believe that. When I saw it yesterday, I thought that it's one of the biggest failures in my life. And I'd like to share this story with you. Maybe you'll have some take from that, and you won't have this FOMO like I have. And let me explain what I mean. When we speak about the success stories in investing, which companies come to your mind? Usually it can be some kind of Palantir technologies, which if you bought recently, let's say almost 5 years ago, and let's go to all-time high, it's almost 900% of gain, which is crazy, no? Also, another one which might come to your mind is NVIDIA, which also gave about 900% if you bought it 5 years ago. But these companies, which you see in mass media, in CNBC, and these names are known, I believe, to almost anyone. But why I was so surprised? But if we choose the company which is not in the mass media quite often heard, it's outperformed and Palantir and NVIDIA, and if you bought it around 5 years ago, you might gain nearly 1000%. Let's see how the stock trend of this performance looks like alone. Look at this performance. Basically, if you bought it on the low, you would gain 1400 plus percent. And this company is not involved into the AI story. It's not a hype company. And what does it do? So this company is an energy service company which engages in the provision of solutions for the production and transformation of hydrocarbons. Basically, this is the web page of the company. So for the majority of people, when you look at the sea, you probably see the nice waves, you see the sunset, sunrises, maybe some of the wind turbines and the ships, but only few people know that subsea there is a lot of infrastructure which was built by someone, which was installed by some company, and this particular company is involved into this business. The company has two segments. One is subsea and another one surface. Subsea segment offers the full life of the field from planning field developments through the manufacture and delivery of subsea equipment and controls to life of field services. And the surface segment provides the onshore and shallow water markets from well to export pipeline. Their surface technologies aim to reduce cost and carbon intensity driven by actionable data and automation. So yeah, this is the public company. You can familiarize with what they have. They've got their own fleet of the vessels. They produce the subsea equipment, they install it. They offer the variety of products which are related to the energy. And why did the company grow so steeply? Because if you look at their performance, let's go to the earnings per share. They went from slightly negative, 0.24 cents negative, to $2.3 per share through the last 4 years. And the company is expected to grow consistently over the next years. But this is the projection from the analysts. So what is the irony about this story? Anyone could say, okay, there is a lot of companies that outperformed this or that. Why would I have a FOMO, for instance? The answer is really simple. The reason is because I've been working for this company for over a decade now. And I didn't even think to follow its performance. I remember the times I was on board one of the ships when the stock was traded around $5. And to be honest, at some point I owned some shares, but then the company was listed in two stock exchanges, one in US and another one in France, in Paris stock exchange. And then it was delisted from the French one. And then I didn't want to deal with US currency to convert the currency from British pound to euro, from euro to US dollars to be able to buy some shares. So it brought some extra charges, and I didn't bother with looking at the company. So what is the main take from this story? Sometimes we are looking for the great investment opportunities elsewhere, but we often miss the industry which we are involved in, which we probably know better. For example, I probably have more clue in the subsea and offshore industry rather than in AI space or pharmaceutical story. And still I'm looking for the great opportunities elsewhere, but I wasn't looking at the nearby, what I have around. And this is probably the greatest lesson that I've learned. If my strategy was that while I work for the company and receive my salary, for the part of it I would buy a stock consistently, this company would bring me much more gain rather than just having the salary. So my point from this story is, guys, please look first to the industry that you know, that you've been working for, that you know definitely more about than anyone else, probably anyone from the analysts, and explore the opportunities there. By the way, guys, do you follow your industry? Can you tell me in the comments where do you work and do you invest in one of the companies from this industry? And how does the industry progresses right now? And if you also can recommend any company to analyze and see if there is any opportunity there. Alright guys, thanks for watching. I hope you have some takeaway from that and you won't make the same mistake as I did. I'll see you in the next video. Goodbye.